Righto, money minus. Jesus Christ. Queensland copper boy, she is heating up, eh?
It's all happening.
Three stories in the region, Matty. Can't wait to go into it.
Oh, love it. We won't give too much away. Mate,
Evolution.
yeah.
Half-year results. They're the ones. So we're going to pull back the curtain a bit more. I think we've spoken about them a fair few times in the past, but it's good to get a bit more numbers. So
Trav loves firing up Excel for Evolution. Mate,
The numbers don't make sense.
Subscription is getting put to good bloody use.
Excel just keeps telling me does not compute, and I put Evolution numbers in there.
Yes, mate, some bloody very horrific and sad news out of SSR Mining's copper mine. So we'll briefly touch on that. Thoughts are with everyone on that operation at the moment. Horrible. Mate, Trav, you've got a bit of a pitch to the money miners and maybe some money miners with some high conviction views on things.
I do, mate. I putting a call out to the money miners there. I think it might have been Matt. Was it Matty or JD that had this idea? Which one of you had the idea?
I thought you had the idea.
Fuck, I can't. Oh, mate, I'm going to give you
Take
boys
the
credit.
idea.
But we were thinking, how cool would it be to have a bit of content where two, really thoughtful people, like intelligent people, they've done their homework, but they have completely opposite views on a stock, go head to head and articulate their reasons. One who's ultra bullish, the other's ultra bearish. They hammer it out on the podcast here at our Money and Mind studio. It would be pretty awesome content, I reckon. So
And I'll be right in the middle, stirring the pot in case there's not enough action.
the moderator with a few knee slappers.
You gonna let them say that to you, mate?
Yeah, I reckon it'd be really cool. And I mean, I reckon it'll be awesome if we do it with like a polarizing stock where you've got no one's really in the middle on the stock. They're either like super bullish or they're super negative about it. I reckon that would make for some great content. But we want people to be thoughtful. They've done their homework. They make good points. It's like a real battle of intellect on the potty. So get in touch with us.
A long versus a short. It'd be like the Battle of Leonora. You could do it on the Leonora stock.
Yeah.
hopefully it doesn't drag on as long.
What are the polarizing stocks out there you'd be keen to see people battle out?
MinRes comes to mind for me.
Very
straight
polarizing.
Up.
Yep.
Genesis, it's pretty high
Polarizing.
short.
Yeah.
I also think Pilbara Minerals would be a great one with a massive, the most shorted stock on the SX. But
Orabanda, that'd be
polarizing.
Another good one.
Interesting one. I've heard very different views on that. There'd be a few. Spartan, I reckon. Especially that's probably more from a exploration to development project rather than a producer, but that'd be an interesting one.
So get in touch if you fit the remit. You want to hammer out your position in a thoughtful way, then we might be able to facilitate it.
And you can't be the MD of that company. Oh, mate, would that? Geez, that'd make it bloody interesting.
I wonder what they would say.
a shorter versus the MD. There's another.
What if the MD is short?
God help us. Mate, speaking of, I'll tell you something that is not polarising.
Tell me.
Like there is not a long or a short. There's just long only. Is DSI. I have not heard a negative or any bearish comment on DSI. And, mate, because ever since they've come on board, the ground support demand has just gone through the roof because companies are around the world to finally know the implications if they don't use DSI, which we've, I guess, highlighted on the show repetitively. So DSI, they've had to take action.
Yeah.
They're expanding.
Tell me.
Mate, they were huge already. They're expanding. Mate, the Kewdale factory right here in the heart of Perth. Mate, relocating. The building's getting bigger. Mate, unbelievable. All on the back of us. All on the back of us.
That is something that I'm not
too many DSI orders coming in. So, mate, they're expanding. Mate, you want to hear some technical DSI stuff? They're chucking in a new roll former. That's the machine that makes the split set friction bolts. Mate,
Yep.
And this thing just does not stop. Feed 2.5 tons of calls of steel in, and out of the arse end comes bloody splitties. New, and, mate, doubling the friction bolt output at Kewdale. Double. Huge, mate. 300-ton stamping press going in. That's what pumps out the plates and the washers. Mate, you can't have a bolt without a plate on it. So you need every bolt needs a plate. Mate, that press combined with the old one going from 25 strokes per minute to 65. More strokes, more plates, more washers. Simple as that, boys. And, mate, lads, coming soon. A robotic welding to get the combination plate onto the main plate. Mate, they're not stopping. They're not stopping at this expansion. we're thinking in the future. Mate, unbelievable. Hey, this
I'm
one
impressed.
sounds cool. I'll show you pictures of this. New hydraulic wiggle bolt press that puts the wriggle in the posi mix bolts to improve the resin mixing when being installed. So, mate, unbelievable. New cable bolt and cutting machine. I'll tell you what, it's as simple as this. If you don't understand any of that, it doesn't matter. Don't let it get to you. Just understand one thing.
Tell me.
DSI just need to be your ground support supplier. That is all you need to know.
Well
Just
said,
let
Matty.
them sort all that shit out in the background and just chuck another DSI order in. Easy as that.
And you're supporting even more jobs in Perth.
Exactly.
It's a win-win.
Win.
This might be the thesis of someone that reaches out to us to do the long verse short. I'm short the stock because they don't use DSI.
Valid point. That is a valid point. That'd be a bloody
win.
tick. That'd be a tick for me. Mate, and this sort of expansion that DSI are doing, it reminds me of another enterprise that has grown in response to market demands.
And Matty Michael's marketing.
Do you know at one point in history, KCA had one IT? They bought their first one, just one.
Yeah.
Now have a look at the bloody catalogue. I count 8. I count 16. I count 24. I count 31 ITs that will be in the fleet by June. And, mate, looking at this exponential rise of just the ITs, which are only one part of the equipment hire business, it has a parallel to Adam Wilson from KCA has a parallel to Amazon's Jeff Bezos, I think.
It's uncanny.
Mate, look at the Amazon stock graph here.
I'm
so
looking.
back in like probably 2009, I think they were about $6.
Yep.
30x'd on that over bloody 10 plus years.
Yep.
$168 a share, 30x.
Yeah.
Adam Wilson's done that sort of multiple on his ITs in 3 or 4.
The
So
number
he's putting Jeff Bezos to shame.
The number of ITs you own doesn't equal the share price, though.
It does. How does it not?
Yeah,
It bloody does.
it does. It does for Adam. But,
It does for Adam.
But we might have to do some more tutoring in the finance department.
This is what we're, mate. It's appreciation, mate. Unbelievable.
Before
mate.
you know it, the market caps, there would just be parallels.
Unbelievable, mate. That's the sort of business we're dealing with here, mate. ITs are only one thing, anything equipment related for underground, mate. People, bloody surface miscellaneous stuff. Get in touch with KCA, the new Amazon of underground mining.
Call KCA.
Good work, Matty.
Righto. Copper. North Queensland copper. Jesus Christ, is this going to be the new heart and soul of copper in Australia? Who bloody knows? I'm keen to hear. Is this going to be the straw that breaks the camel's back for M&A in North Queensland? Let's find out. Ricardinho, what is going on, copper?
There could be some overdue consolidation in that in the Queensland copper players out there, Matty. I'm keen to talk about some murmurs of two companies merging that both have a bit of copper ground just south of Isa there. So this one's an interesting one. There's a pretty curious story here, and it involves Hammer Metals and Carnaby Resources today. The headline out there is that these two companies have confirmed that they are having merger discussions. However, there's a non-obvious read-through about the series of events that have unfolded, which I'm keen to talk about. But before that, I just want to set the scene, right? Both these companies are Queensland copper hopefuls with adjoining tenure south of Isa. Carnaby, $93 million market cap. Hammer, only a $40 million market cap. The logic for the two to come together has stacked up for a long time, but just because a deal is logical doesn't mean it happens. There are other factors, which we talk about all the time. Yesterday morning at 9:37 a.m., Hammer Metals, there was a pause in trading and then a trading halt on the ASX, and they didn't come out of that halt until this morning. The reason they halted became apparent this morning, and it's because they'd received a speeding ticket from the ASX.
Ooh.
So in a few short hours that the market had been open the previous day, Hammer's shares had rocketed from 3.6 cents to 4.8 cents, up 33% on the day on no news and big volume. And when ASX notices some unexplainable share price movement and abnormally high volume, they send a query to a company, and they put the question to the company and they say, are you sitting on any market sensitive information which hasn't yet been released to the market? And If the answer to that question is yes, then protocol is generally for the company to enter a trading halt, and then they prepare a way to disclose that material information to the whole market. So Hammer's board and management, they've taken a view that their confidential merger discussions with Carnaby that had been underway at that point in time, were considered material information,
which might not have been confidential anymore.
So they've taken the view that this needs to be disclosed as part of a response to ASX's query here, and I'm going to read out the paragraph that they respond to ASX with. They say, the company advises that it is holding confidential and non-binding discussions with Carnaby Resources Limited regarding a potential merger. Discussions remain confidential and incomplete and are at a relatively early stage. There is no certainty that a transaction between the companies will eventuate. The company has today advised the market that these discussions have commenced. They put out this separate ASX announcement, similar wording, announcing that early stage confidential discussions are underway. And at the exact same time, Carnaby released a very similarly worded announcement too. But Carnaby's has this extra line in there, which I'll read out, which says, Carnaby continuously assesses a range of opportunities that make strategic and financial sense and have the ability to deliver value for Carnaby shareholders. So they added a bit more padding in there. I think Carnaby kind of played it down a bit more than Hammer did.
Yeah, so because they could be technically in the data room, like by the way they've worded it, like non-binding discussions about a merger.
It could be before data room. This could be just NBIO. This could be before that. It's just like chairperson discussions.
Right.
Yeah.
So before this M&A read through, Trav, does the deal actually make sense?
Putting the two companies together. I think yes. Like when you ask around about deal rationale between these companies merging, it's pretty straightforward. Both companies have tenure on really well mineralized copper belt, but there's a lot of just little deposits here. It's not like either company has a big large bulk tonnage deposit that you wrap a development plan around. But you could see a hub and spoke model come together if the two companies merge. Potentially put a processing plant at Kelman in the middle and happy days. Further to that, Carnaby's Mount Hope deposit is on this like little postage stamp sized mining lease, which I'll flash up here. You can see that little box
inside Hammer Metals tenement.
Yeah, exactly. It'd be pretty challenging to wrap a development plan around that deposit without doing a deal with Hammer, who has the adjacent tenure. In Hammer's ASX docs, they even state it as being as close as 40 metres from Carnaby's Mount Hope Central prospect. So there's an aerial view of that little postage stamp, gents, which you can see that Mount Hope Central boomerang lode there in red at the bottom. And that's 8.3 million tonnes at 1.6% copper there, just that little red patch there.
Yeah.
Now, word on the decline is that Hammer have been pretty interested in doing a deal with Carnaby for some time. The cash is running thin, only $1.8 million left in the kitty as at 31st of December. Carnaby, on the other hand, they're less pressed for time to do a deal. They're sitting on $18.4 million cash, which can last a hell of a lot longer in a depressed market. They're the bigger company, and so when it comes to doing a deal, there's less desperation, maybe nil desperation. And yes, that was an attempted pun relating to Carnaby's nil desperandum deposit, which
boom, chick, boom.
I thought desperandum translated to desperation until I Googled it, and it does not. It translates to despair.
Despair. There you go. Getting into literature.
A bit more word on the decline. Here is context as well. So apparently Hammer, they've been keen to merge, but Carnaby probably wouldn't play ball. Not as desperate, right? But apparently Carnaby, they've wanted to drill out Mount Hope, but they need access agreements from Hammer to do so, and Hammer, maybe played hardball on that front. So the two have kind of there's been some tensions there.
Right.
So with Carnaby less under pressure to get a deal done, but a clock ticking for Hammer, I look at the timeline of events in the last 2 days above with questioning eyes. Carnaby don't need to do this deal. Yes, it makes sense, but they can come back in 6 months or come back in 12 months and maybe get even better terms. If Carnaby walked from their negotiations, it would be pretty tough for Hammer. They're in a precarious situation when you're thin on cash, right? And when you have those dynamics in negotiations, sometimes parties play some funny games. To be absolutely clear, I've literally no idea what the discussions have occurred between Hammer and Carnaby. But my cynical eyes when I look at events, and And I think about the potential leak here, right? Because that's the interesting part of this story. If you think the only reason we're talking about the potential merger is because there was a potential leak that potentially translated to volume and price spike, which means that Hammer and Carnaby had the disclosed discussions when ASX gave a please explain, then you can start to come up with some pretty cynical rationales for leaking that information. If you need to do a deal more than the other party, how do you make them bid, right? How do you get someone to bid for you if you're the one that needs to do the deal more? And it's a tricky thing to make happen when you're in that kind of situation. You can't make someone bid if you need to do the deal more. You kind of have to wait for them to bid. But if discussions between two parties, find a way to surface, then sometimes that public exposure of said discussions and said potential merger actually can put more pressure on a deal eventuating.
Would it also put pressure on other parties outside of Carnaby and Hammer as well? Like saying, oh, shit, that might have been looking for a bit of consolidation themselves?
It totally can be. For Hammer, if this disclosure leads to pressure on Carnaby and a deal gets done, then it could be a pretty convenient disclosure for them. And so I always just try and back solve, how did this thing come about? Who has an incentive? And I don't know the answer here, but it's a pretty interesting one nonetheless.
So is there anything to read into by, I guess, both parties are saying discussions are confidential, incomplete? They haven't really given anything away, really. They just said they're talking.
Yeah, and they say early stage, right? But that's the thing. If discussions were really early stage, then I don't actually know if Hammer's board would have disclosed it. Like companies, they're always evaluating these strategic opportunities, and a very early stage discussion would be ordinary course of business. And I don't think it would really warrant explicit disclosure if it was just really, really preliminary kind of discussion. So plus you've got that big volume spike and price spike a couple of days ago, which if that was truly caused by a potential leak, then would you really see that if things were really very early stage and you didn't even have like a merger ratio or price in mind? So I'm not so sure. To me, it kind of indicates that discussions were more advanced than appears when you just read those words. My view is that I really hope, Mount Hope, a deal eventuates, and it would make the pro forma a more interesting company, I reckon.
They're going to have to be, all these companies together, they're going to have to be pretty malleable in their discussions, just like copper itself. What else? So this area, Trav, we've got I've found one map, but I think we need to get a bit of a detailed map done up of the whole area in and around Mount Isa, Cloncurry, because there's so many little players in and around there, and it'd just be interesting to see who else could be part of this consolidation. What's Glencore thinking? They've obviously got the Mount Isa mines and the plant in Mount Isa.
Yep.
And then you got Evolution with Ernest Henry. Like there's a lot going on here. So
yeah, I might have a treat for you next week, Maddie, because I think I want to explore that a lot. I reckon there's doing a deep dive on the Queensland copper players is a really, I reckon it's a great time to do it, because I reckon that area is prime for M&A and prime for consolidation. So next week, why don't we give that one a red hot crack, and I might even be able to whip up a surprise on the map front for you, mate.
Oh, mate, because we will be here, Money Miners, presenting news and good ads. That's what we bloody do. Righto. Me bloody scroll. Mate, AusSuper going substantial in the cratering 29 metals. Yeah, I'll bring up a chart of 29 metals because it is what they call a bit of a falling knife at the moment.
It's 29 cents.
Well, there you go. Maybe that was a trigger. Maybe they've just got to think, oh, this is fate. Trenchy's old rule, never catch a falling knife. But AusSuper have. What's the read-through?
Well, there's a couple read-throughs. To start with, AusSuper have been a substantial shareholder for a long time, and we spoke not too long ago about Ausbil going in the other direction. You've also got Yarra Capital as substantial shareholders. They haven't amended the amount of shares held. They haven't participated in any of the dilutionary raises that have taken place, so their shareholding has dropped back from roughly 8.6 to below 6% shareholding now. But we were having a bit of a chat about this morning, and the word contrarian came up, and contrarian doesn't necessarily mean you're gonna make money. It means you're thinking different to the crowd. So it's interesting. We've spoken numerous times about the dynamics at AusSuper and the amount of cash they need to deal with and invest. So that that doesn't change the fact that the investments need to be good and they need to make money. So
I've heard someone kind of make an analogy about 29 Metals situation at the moment, and they were also talking about Oceana back in the day when they had a big capex blow at the DPO. They also talked about St. Barbara way back in the day, and both companies got through, and they would have been pretty phenomenal investments had you have participated back then. But it doesn't always work that way. So contrarian is 100% the right word there, but I use the word degenerate because there's a lot of debt there and the risk is crazy. But at the same time, though, if you have any party kind of put their foot down and maybe backstop some of that debt in some way, shape or form, AusSuper's
they're the ones,
the entity to do it. But AusSuper are always going to be limited by going beyond 20%. I don't think I've really seen them go above 20% on a mining company. I don't know if you've seen that. So how do you kind of clean up the balance sheet if you've got a bunch of funding potential, but you don't want to go above 20%? Are there going to be some convertibles which convert at a future date? I don't know.
Yeah, you're taking all the words out of my mouth. We've seen them get creative in how they fund companies, and if anyone has the capital power to do it, it is AusSuper. So we'll see right now, obviously at 14%, another raise they could be there for to help. Also worth noting, EMR is a big shareholder.
What are they? Are they about 46% or something along those lines?
That sounds right to me, mate.
I think it's something like that. But and they've tipped in and underwrote and everything on all these raises. They are, it'd be interesting to see as a private equity group how long they will keep going like this. So and whether AusSuper's involvement is an indication of future things to come there. But it's very interesting. I'm sure they want to fucking get rid of it.
Yeah. And the last comment on AusSuper is that we just saw them tick up through sort of mechanisms that we just touched on with BCI Minerals jumping from 14% to just over 20% shareholders in that group now.
All right, boys, first of the, I guess, half-year results coming out today that we've covered, the Evolution, and eyes were always on that, and bloody the Microsoft 365 subscriptions getting put to good use because Rick Ardinio has been on the tools, and he will give you stuff that you will not get anywhere else in the world.
So the first thing that you sort of see opening this one up is dividend. They paid a dividend, 2 cents a share, not massive, but the wording around this one's really interesting. So 22nd consecutive dividend. And then here are some of the words they said. Evolution's policy is, whenever possible, to pay a dividend based on group cash flow generated during a year. Now, we want to get into this group cash flow concept that they speak about. The company is obviously very eager to continuously signal to the market their financial strength. And even though this 2 cent per share dividend is only a total of $39 million, it's not a massive amount. It perhaps could have been better spent paying down some of their debt. They've taken on a lot of debt in recent times. They're sitting at a net debt position of roughly $1.8 billion. But on the other hand, we know Evolution take their marketing seriously, and it might in all seriousness be well spent keeping that perception of the company as a dividend payer, as a low all-in sustaining cost.
I was about to say they've got a low all-in sustaining cost and they pay dividends. Like, what an investment opportunity.
But it might be very worthwhile doing it if you can attract investors.
The more scary thing is a D-rate you get from missing a dividend because all the fun, whatever capital's there for the div yield disappears and then you D-rate.
Yeah, that could cost a whole lot more than the $39 million. So I think we should unpack Evolution a bit more.
Yeah, I mean, to kick off, let's just compare two of the sell-side notes that came through this morning. The first one...
Are they polarising different?
They are. They are.
It'd be great to get these two.
Here we go.
Yeah. So the first one from Jarden, where John Bishop has an underweight slapped on the stock with a target price of $3.10 per share based on... This is how he values it, just on a NAV per share.
So that's 100% 1 times NAV?
Yep. Compare that with Citi, where Kate McCutcheon's got a more constructive $3.95 price target. But the catch is the methodology. That target price is determined, catch this, We value Evolution using a combination of NAV, in brackets there, $3.28 per share, multiplied by 1.2, and 24-month forward EV to EBITDA of 6 times. This yields a rounded value and a target price of $3.95 per share.
So that's 50% on the NAV calc and 50% on the forward EV EBITDA.
Yeah.
Right.
It's a blend, but it's not a blend of 1 times NAV. It's a blend of 1.2 times NAV. So to clarify though, if both analysts were simply valuing Evolution at 1 times NAV, which is the right way to value Evolution, you'd be getting similar price targets, $3.10 versus $3.28. So they're not too different after all, but you just gotta look at the details, Matty.
Is there any read through why?
Why they do that?
Is there what's the reason why that methodology would have been used?
I mean, you can have a cynical take, but the reason why you might use a 24-month out.
I know what the cynical take is.
But the reason that they might put forward that they would use this is that in that point in time, the earnings have perhaps normalised now that you're coming out of a period where a lot of capex has gone into the ground. The EV that you're going to have at that point in time is going to look a bit healthier with a bit of debt having been paid down and the cash position have been improved. And yeah, I mean, that would be the reasons I think they would put forward for that.
I can't figure out why you'd be 1.2 times NAV though. Like unless you're a royalty company, a mining company should trade it more than 1 times NAV. But.
Yeah, right. So what's the outlook for Evolution? What's going on?
Yeah, just a couple more comments on where they are right now and how they're going to look for the remainder of this financial year. They need a strong finish to the financial year in terms of production. To meet guidance, they'll need a record half-year performance. Now, obviously, they've got another asset under their belt as well, though that is predominantly a copper asset. So the consensus expectation is that they'll fall over 50,000 ounces short of what they have guided. And over time, like we've touched on, they need to just dial back that net debt position, shore up the balance sheet, and free cash flow is going to be the focus. They've spent a lot of money on all of their assets, and coming out of that period, they need to really show the market that they can harvest a bit of cash, and the free cash flow ultimately can be a whole lot more healthy.
Just to go on those numbers, right? So
do they make sense, Trav?
No. So Evolution's market cap $6 billion Aussie plus net debt of about 1.9 billion Australian gives an EV of about $7.8 billion Aussie, right? Now, what real cash generation do you get for such a big EV like that? Let's look at the group cash flow in the way that they define it. They define it as cash flow before debt and dividends and M&A. And I'm kind of comfortable with that definition for the most part. They include interest expense in group cash flow, which is good. But I look at how they break it out in their reporting, and they've got a line item that comes after group cash flow, which is transaction and integration costs for their M&A. That sits outside. I'm not that nice, so I put that back inside group cash flow because I think you should kind of think of that as OPEX. And on a trailing 12-month basis, you know what Evolution's group cash flow was on my number? 25.
Free cash flow?
Group cash flow, yeah, 25 million bucks, right?
Ooh, so $6 billion company.
$7.8 billion EV, 25 million bucks. That's 0.31% of its EV today is the trailing 12-month group cash flow. I want to contextualize that $25 million, for a moment. The 2 cent interim dividend that they've agreed will equate to $39.5 million. Now, their dividend policy is to target 50% of group cash flow. On my formula, that's actually more like 158% for the half year. Yeah. So, and even on their numbers, if you change that line item and you put it back where they put it, it's 75% of group cash flow. So that's above what their guidance is on dividend payout. Go back 6 months ago when they did their full year results and they announced a 2 cent dividend then again. And you would have seen that for that half year, their group cash flow was a measly $1 million, but they still paid a 2 cent dividend. So, I mean, I think the trend is pretty clear when you look at that. Evolution appear pretty happy to maintain 2 cent dividend, even though it doesn't really match up with that payout guidance of 50% of group cash flow. And I think that's because it lets them boast about the 22nd consecutive dividend.
Oh, but the market's forward-looking, but Trav.
It's a trend I'm watching out for right now, Matty. I think we'll see a bit of this in earnings season where some miners are just adding more leverage to maintain a dividend payout. It's not free to do that, right? Like the only way you're achieving that is because you're drawing down more debt and or raising equity. And look at Evolution's finance costs for the half year, $63 million. Like, yeah.
There's another detail that stood out to me reading the half year results today, and that's just looking at the operating costs. If you look at the all-in cost there, I've got it highlighted for people watching on YouTube. You can see, that's $2,400. That leaves roughly a 20% margin above the all-in cost, not the all-in sustaining, but the all-in cost. But there's a bunch of costs still not included in that all-in cost. So I'm talking about things like financing costs, growth capital, certain exploration costs, acquisition costs, certain corporate costs. They're just a few types of costs that are not included, and that all eats into that margin that they've depicted there, being the difference between $2,400 and roughly $3,000, depending on where the gold price is. So to your point, Trev, it doesn't leave an awful lot of margin left for the company, and it makes you kind of call into question the sheer size of the business at this moment.
The counter point that Evolution Bulls would sort of point out is that they're spending a lot of their free cash on capital right now, and they'll reap the benefit of that in the future, and then you'll have kind of juicier free cash flow yield once more with this company. But yeah,
that also perhaps argue that they're very well positioned now for a bullish copper environment as well as a bullish gold environment. There'd be a couple of the things that I'm sure the company would put forward to say that this has been a period of investment that's primed them for a more consistently cash flow producing future.
Who's the Evolution Bulls out there? Do you know of any?
Yeah, they probably are. I mean, I don't know. I don't know them in person, but I just always I don't like seeing, drawing down debt just to pay dividend. And I get the thesis because there are a bunch of institutional investors who will only own you, and their mandate is to only own you if you pay the dividend. And then you'll derate if you don't. But it just doesn't feel right. Like it doesn't feel like prudent management to be doing that.
You wouldn't run a private business that way.
No, I wouldn't. Yeah, I wouldn't. Yeah,
So
and not just that. It feels somewhat counter to how they go about saying and deciding that they'll pay dividends.
Yeah,
but they have their reasons.
SSR Mining, one we have never talked about before, but look, very unfortunate events coming out this morning. So look, 9 miners are currently missing. So they've had a large slip on the heap leach pad at their Copler operation in Turkey. So obviously those operations have been suspended. Horrible thoughts to anyone involved over there. Best wishes. It's just horrible seeing that. There was videos on Twitter of it. It looked similar to, I guess, what happened at Vale's operation when they had that slip. Same sort of quantity. It was just there's terrible.
Not too much more to say on that one. It's awful, and just thoughts go out to everyone affected there.
Yeah, because they had an investor call. Was it already scheduled? I know they had the investor call link on the announcement.
It was
suspended
it was an investor
operation.
Day. Yeah. It was an investor day scheduled, to the best of my knowledge, which they went ahead with the call.
Having just put an announcement shortly before regarding the accident that had happened. Yeah. And then the call got abruptly cut off from our understanding. And that's sort of where that sits at the moment. This company, like you said, Matty, is a CDI here, but they are a North American-based business.
Yeah, so the stock price obviously down 50% immediately. So
this is the key asset, and you can see the footage. It looks pretty dreadful.
Horrible. Boys, presentations. There's a few coming out between the Bell Potter Unearth Conference and RIU at the moment, so we thought we'd have a little scour through, see if anything's interesting. Normally it's just the first one, Bellevue, is interesting because they've actually released some new information in the presentation.
Is it market sensitive? Was it?
No, it wasn't ticked as market sensitive.
Oh, okay.
But which I was surprised about. There's probably a reason for it. Hey, that's why we need a COSEC on the dial. I've been told if we have a COSEC, they'd know why it's bloody not market sensitive. So last night, US gold price down 1.3%, so down $27 US overnight. So it's sort of red across all the gold producers today, but except for Bellevue, which was up 4 to 5%. So I found it interesting. Oh yeah, ding ding ding! I've got some bloody stock in this now.
Oh, Matty, it was a Bellevue ad. when you did a verify.
Yeah, I know. That's the first thing when I bought shares. I'm like,
Matty.
oh God, bloody. Anyway, I've got another mention of a verify partner, and it's not Bellevue. It's coming up, mate. So Aussie gold price is only down $15. So, but it looks like you look in the Prezzo here. They've actually announced they produce 10,475 ounces for the month of January, and the mill's hitting that nameplate throughput. So still below the ounce rate required to meet this second half guidance of 80,000 ounces. So they're still needing a lifting grade. I saw Hayden Bairstow's note come out. I think said based on their calcs, they look like they've hit about, I think it was 4.5 grams through the mill, but they need that to lift up to 5 to 6 to actually make guidance. So still needing a lifting grade. So, but in that latest quarterly, you're more thinking like, right, if the gold price has gone down so much, how have they gone up? But they're a little bit protected because they did have that 25,000 ounces of hedging that they put in last quarter spread over 6 quarters at 32.33. So they've got about 26,000 ounces hedged at around average 2,900 Aussie for the next half. So that's 32% of what they're guiding. So slight protection in moves against the gold price, but I'm sure they bloody wanted to hold.
The gold price is still higher than that though, 2,900.
Yeah, but it's not going to have as much of an effect as someone that isn't unhedged.
Yeah.
That's unhedged. So what else, JD? Westgold.
Yeah, just a couple other interesting things from some announcements. So Westgold, there's a slide that said generating free cash dash 238 million in cash and bullion at the end of the year. Now this one kind of stood out to me. Westgold has been performing much better. They seem to have really turned a corner, but it doesn't make sense to me to point to your pile of cash as a great example of free cash flow generation, given that we know they raised $100 million in 22. Over 60 came in the door in 2020, 23 odd million in 2019. It just makes more sense to point to your free cash flow generation when you're talking about the company being a great generator of free cash.
Oh, they do. It's a highlights slide, right? But in there, all the quarterlies, they show the cash build quarter on quarter.
Yeah, and that starts right after the $100 million raise came in the door. Ramelius, another one. They didn't have anything really new here, but 930,000 ounces in reserves is less than 4 years at current rates. That said, they do have 7 million ounces in resources. And just on the map there, Ro and Rebecca, they look as stranded as ever without a nearby production centre. So
They own.
Exactly, that they own and can use. So expect another deal coming sometime soon. And notable by its absence was any mention really of Edna May and the projects in and around there. It was a section on Mount Magnet and the surrounding area, and then Ro and Rebecca, and hardly any comments on Edna May. So
yeah, I don't think they would have liked Northern Star's previous quarterly where Carasoo Dam was one of the outperformers. So they're not going to want to flog that off anytime soon.
You're dead right. Matty, you looked at Global Lithium. What'd they say?
Oh, not too much. They're still doing drill and met test, resource update, studies.
Hoping for the lithium price to go up.
Just hoping, sitting there hoping. So MinRes on the register with 10%. But I did find this, boys. Look at this for, I guess, companies that have taken action based on money of mine. Might have been in action already. Have a look at them sitting around the camp there. It's a K-drill camp.
Looks good.
That. I think if you zoom in, the guy in the yellow shirt on the left there, I think it's Ryan O'Sullivan.
Really?
I think. I can't be 100% sure. It does look a bit like him. It's a bit blurry, but I thought he might have had an orange shirt on. I'm not
It is a
sure.
bit blurry.
Yeah.
I thought he just looked like the Hulk all the time.
And then if you want to have a look at what the ore body looks like, check out their verified geological model.
Oh, there it is, mate.
Mate, there you go, mate. Look, studying, testing, sitting there waiting, but
They're doing the right things.
they got some good partners there.
They're trying to get in the good books of money of mine, I think, by just using all of our partners.
There you go. That's another way to get a mention.
Matty,
the partners.
You had a little peek at Lake Resources too.
Yes, good old Lake. You look at the sensitivity analysis. How do you pronounce it? Kachi project?
Oh, it's about right.
Something like that. MPV sensitivity. You look at the lithium prices for the bottom to top point, 28,000 to 38,000 US for, I assume that's the lithium carbonate price.
Yep.
But unfortunately, the current lithium carbonate price for fast markets is US 14,250. So about half of the bottom of the sensitivity price. So
Yeah.
that's pretty much all you need to know there.
Thanks to Woodmack's old numbers on that one, mate.
Geez, I don't think Woodmack will be getting much Christmas party invites from the lithium coast. Yes, anyway.
I think you
Oh,
did
and I got
mate.
one more. We haven't put it in the show notes, mate, but I did get tagged in this one on Twitter. Deep Yellow, and they've got a slide there where they show the team. And if you look at the bottom there, it says senior team has over 500 years of combined uranium experience. Now on this post, I have to shout out Mondi here. He goes, and that's only counting Borshoff. Imagine if they included everyone else at Deep Yellow.
What did who was it? Was it Rick Rule when he said, "Oh, John Borshoff walks around and has to give autographs to everyone's
Kisses
grandkids
babies,
where-
yeah.
Kisses babies. That's
Yeah,
it. Oh, love your work, boys. It's Friday. Bloody another successful day of delivering mining news to the money miners. Bloody sorry, I forgot to put the chapters in yesterday on YouTube. My bad. Oh, bloody bug it up there. I never usually make any mistakes. But mate, tell you what, companies that never make a mistake, VRIFY.
True.
True. InvestorHub, probably also true.
True.
Oh, DSI Underground, definitely true. Bloody SMEC Power and Technology.
McMahon Mining Title Services.
Mate, I'll tell you what, if someone made a mistake, bloody Eva and Helen would be straight onto them there. So,
They got good standards.
Yeah,
Anytime exploration services.
mate, Casey, A-Site Services, Brooks, also known as Amazon Site Services, mate, Brooks Airways, and K-Drill.
K-Drill. Hoodaroo, boys.
Keeping global alive.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.